Good afternoon, everybody. Welcome to the special council meeting, City of Armstrong, Tuesday, April 22nd, 2025. Time is 5 p.m. and I will call this meeting to order. We respectfully acknowledge that the land on which we gather is the unceded ancestral territory of the Silks, Okanagan peoples and the Splatsin of the Secwepemc Nation. Regarding the adoption of the agenda, that the April 22, 2025 special meeting agenda be adopted. Do I have a mover? Councillor Velstar, thank you. Second, Councillor Todd. No errors or omissions, nothing to be added. All those in favor? Carried unanimously. And moving right along to the presentation reports, we have KPMG here with us today. Terry, are you going to start or? Yeah, okay, thanks. We'll call Terry Martins to the microphone.
Thank you. So the order of how we're going to be doing this is I'll present briefly the financial statements to council, and then following that, KPMG will be doing a short presentation on the audit findings report and the audit planning report. So financial statements. The statements themselves are comprised of four different statements. So the first one is the statement of financial position. This is somewhat of a resemblance to the balance sheet in the private sector, but it looks a little different, and it's called a different name. Essentially, what this shows is assets, liabilities, and the overall equity of the city. So financial assets for 2024, December 31st, $34 million in financial assets, and essentially those are assets that are either cash or convertible to cash. That's why they're called financial assets. So overall financial assets increased from 2023. Liabilities in total, 24 million in 2024 versus 23.4 million in 2023. So up slightly. The next line after that is net financial assets. We're fortunate as a government entity to be in a net financial asset position, meaning our financial assets exceed liabilities. So that is to the tune of 9.9 million in 2024. That number is a financial indicator of how the ability for the city to extinguish its liabilities from its financial assets. So we are in a positive situation there, which is good. Many other government entities have a net debt situation, and that obviously is not as favorable as where we're sitting here. The non-financial assets are mostly made up of capital assets and infrastructure. So that $55 million amount there is the historical cost of capital assets that have been purchased and are in use as of December 31st, 2024, net of accumulated amortization. So amortization is more the new word. It used to be called depreciation years ago, but it's now amortization. So that's what that means. So the net assets historical value, 55 million and change. So accumulated surplus on the bottom is essentially the net equity of the city. So with everything all rolled in together, it's $65.7 million in equity. So we'll go to the next page. Statement of operations basically is the revenue and expense statement. So we show budget and actual plus comparable from 2023. So for revenue, we're looking at 11.1 million in actual revenue for 2024, down slightly from 13.7 million in 2023, and that's mostly due to government transfers going down. Government transfers essentially are grants from senior levels of government, and we saw an unusual high amount of government grant revenue that was recognized in 2023, so 24 is reduced because of that. For expenses, we're looking at roughly $9 million in actual expenses. And again, this is consolidated. This would be for the entire city, including water, sewer in general, altogether. So that is up slightly from 8.9 million in 2023. So we break it out by function. And there are note references that those notes are in the notes to financial statements that follow. Those notes provide additional information and context for readers that want to know just more information about that number. So the annual surplus for 2024, 2.1 million. This number is higher than the cash surplus that was reported to you not long ago for 2024, and the difference being the financial statements include items such as non-cash expenses like amortization. The financial statements do not include transfers to and from reserves, and they do not include capital expenditures. So with all of those nuances built in to these financial statements, the annual surplus is much higher than what the cash surplus was. This would be an accrued surplus versus cash surplus. So we'll go to the next financial statement. So this is a statement of change in net financial assets. Essentially, what this is doing is reconciling the previous two financial statements. You're starting out with your surplus from the previous statement and then working your way to change in net financial assets, which was on the statement of financial position. So not a whole lot of information here, but this is one of the statements that we're required to publish. I'll go to the next one. This is a statement of cash flows. This shows all of the inflows and outflows of cash for 2024 and comparable for 2023. And those inflows and outflows of cash are broken out between operating activities, capital activities, investments, and financing. So this shows the reader where the cash was, how the cash was coming in and how it was leaving. And it all reconciles on the bottom to the cash position at the end of the year, which was 2.8 million. So what follows are several pages of financial statement notes. So these notes provide additional context to the operating environment of the city, including policies on how we account for certain elements in financial statements. Also, it provides tables with additional information. As I mentioned before, there's references to different notes where you can see a breakdown of what makes up that number. And if we scroll right near the end of the document, so many pages down, there are 6 different schedules. So we'll start with Schedule 1. Yep, up a little more, and there we go. A bit hard to read on the big screen, but this is a schedule of operations by segment. So this is a different way of looking at our revenues and expenses. Sorry, I'll let you find your spot there. So it's near the end of your financial statement package. So this breaks out revenue and expenses by the various different segments or departments that we show in the city. It also shows expenses by object and not by function. So this is, again, a different way of looking at expenses. If you wanted to see the breakout between salaries, materials, and contracted services, this is where you would look, and you would be able to see that it's broken out by segment. So again, the top half is 2024, the bottom half is comparable for 2023. So the next schedule is a more detailed breakdown of our capital assets and infrastructure, broken out between our different asset categories. That way you can see what's happened in 2024, with the top half of the schedule showing cost with additions and disposals and write-offs, and the bottom half showing what's happening with accumulated amortization throughout the year as well, and net book value at the bottom for each of the asset categories the city has. It does, yes. So any assets or infrastructure that's jointly owned, for instance, cemetery, parks and recreation, and fire, these numbers would include our proportional share. So yes, that's historical cost.
Councillor Ditchy, can you use your microphone so the people online can hear you?
Yeah, sorry, we built the new arena in 2005 for around $9 million. To rebuild that today would be, I know there's a difference between replacement cost and whatever else, but it would be probably in the $30 million range or more. So I'm just wondering, like, my question is, at what point do we, as part of our asset management process, I'm assuming, we would be taking a look at the valuation of those facilities to see what the actual real value is, or the actual values of those are, right?
Yes, in our asset management project that we went through not long ago, actually, we have those numbers.
Yeah.
We have the approximate replacement value for, at that time, obviously that's changed since then, but we are not allowed to record replacement values in our financial statements. It has to be historical value.
Historical value.
Yeah. So the next schedule is a breakdown of our accumulated surplus. So this is the basically the net equity of the city, but broken down into its various components, starting out with the equity and tangible capital assets at the top and working our way down. Statutory reserves are a part of that number, so it shows the breakdown of that, as well as non-statutory reserves, and then the unrestricted surplus at the bottom there. So that is basically a breakdown of the accumulated surplus. The remaining three schedules in the package are all unaudited, and these are schedules that the provincial government requires us to publish with our financial statements. Basically, it's continuity schedules of provincial funding that we've received over the last little while, that there's still amounts available that have not yet been spent. So the COVID-19 grant, this is the last year that it'll appear in the package because it was used up in 2023. So for 2025's year end, it'll be off the table completely. And the remaining two we'll still have to report on until the money is gone. So what staff is looking for is a resolution to approve the auditor's report and the 2024 financial statements. Thank you.
Thank you, Councillor Nietzsche and Councillor Todd. Motion, do we have questions? Councillor Weiner.
Quick question. Looking at the accounts receivable from both the statement of financial position and the cash flow statement, just the swing there, I'm just curious, what is, at December 31st, what is that comprised of? What is that made up of generally?
The accounts receivable in particular, there is a note that breaks it out, and that is note number 4. So if you want to scroll up quite a ways till we hit note number 4. Go down a bit. Yeah, note number 1 is very long. There we go. Okay, so the accounts receivable is made up of those amounts. Trade receivables would be anything that is not property taxes, utilities, or investment interest. So that is more of a general receivable. Utilities would be water and sewer garbage. That is receivable as of the end of the year, billed but not yet paid by ratepayers. Miscellaneous receivables from senior levels of government. The large amount there is our investment interest receivable as of December 31st. So that is the big chunk of it right there, where the $28 million in investments that we recorded at the end of the year, 1.3 or so million is interest that we've recorded as revenue but haven't received yet because the investments haven't matured yet. So that's a receivable. And then miscellaneous other, 173,000.
Perfect, thank you.
Any further questions? Hearing none, then I will call the vote. All those in favor? And that'll be carried unanimously. Thank you, Terry.
Thank you. And I will introduce our auditors to the podium.
Yes, good afternoon again. Craig and I rock, paper, scissors. He lost, so he's going to do the presentation of the report. But I just wanted to say, I guess, hello more formally as we're sort of back after a few years off as being auditors. I also just wanted to start off, and Craig will probably repeat, but just thanks to Terry for a smooth audit process. You know, sometimes we come out and do our audit work and we're really bookkeepers and accountants, and then we audit it. So in this case, it was the latter. We just served the role as auditor, and Craig will go through the report, but there's really just some fine tuning. And oftentimes when I present financial statements, I always make a reference to sandpaper, which is we come in, and in this situation, we sort of came in with like a 500 grit sandpaper and just polished what Terry had already done. Other times, again, we come in with a chainsaw and have to really work things before we get to this stage. So again, that's just a reference really to what the controls are and the work that Terry's done before we get out here and have things in good shape. So I will leave it at that and turn it over to Craig to go through some of the highlights from the process, and we'll be answer any questions.
Okay, thank you, Murray. I don't turn this. Okay, so there were two documents that were circulated to you prior to this meeting. So the first one is the audit planning report, and the second one is the audit findings report. We'll spend a couple of minutes on the audit planning report, and then we'll turn to discuss our findings for the audit. And so if we turn to page 5 of this document, the first item we'll discuss is our materiality. So just a few more pages. Yeah, so we can start here. So for our audits, we establish a materiality as part of our planning process, and then we use this to guide us when we plan out the audit. So when we determine the nature, timing, and extent of our procedures, identifying and assessing the risks of material misstatement, as well as the nature, timing, and extent of further audit procedures that we're performing. And if we turn to the next page, this is a breakdown of how we determine materiality. So we identify various benchmarks as part of our process of determining materiality, and we select the most appropriate benchmark as a metric that we use to gauge the threshold which we're setting materiality at. So for this audit, we use the benchmark of revenues for the year ended December 31st, 2024. And so that was one of the benchmarks that we considered when setting materiality. And then we established and set materiality at $285,000. And after we set that, we've considered that threshold against the benchmark and determined that it was 2.5% of the benchmark amount. And so that's within the range. We do essentially a sideways glance and consider what our professional standards say, which for this particular benchmark, it should be within 0.5 and 3%. So we're below that, which is good. And then we also establish an audit misstatement posting threshold. So as we're going through the process of the audit, we're identifying and reporting to you items at a much lower threshold. So any misstatements or findings that we have that have exceeded 14,200, we're bringing those to your attention. So we kind of have these different thresholds that we're setting, and it's guiding us as part of our way for doing the audit work. And if we turn now to page 9. So on page 9 of this document, we have some required inquiries. So as part of our audit process, we perform inquiries and testing with management, but we also reach out to those charged with governance. So our in-charge, Sidoni, reached out to the mayor and had these inquiries already, but now that we have all of you in the room, we're essentially repeating these inquiries just to make sure that there's nothing that should be brought to our attention as part of the audit process. And so essentially this is just an opportunity for you to raise to us before we essentially finalize the audit, if you're aware of any suspected, alleged, or instances of fraud that have taken place, or if there's been any other items that you're aware of that you want to bring to our attention. So maybe take a moment to see if there's anything that you want to raise to our attention. Okay, perfect. Yeah, and nothing came up in our previous discussions as well, but again, it's just part of our process that we have these required inquiries as well. And so now if we can flip to the other document. so the audit findings report. And so a few other items that were included within this document were essentially talking about how we were planning to approach the audit engagement itself, but within this findings report, we reiterate some of those items, so I'm not going to duplicate it, and we can focus on discussing the findings as part of the audit. So if we turn to the third page, or one more page, fourth page, we've essentially summarized where we're at, and these 2 pages of highlights summarize a high-level overview of the information that's included in the document. But the first one I'll touch on is the status, so where we are today with respect to the audit. So this was prepared last week. So there was some items that we were finalizing and signing off within the document, which are within our audit file, which are now complete. So where we're at is having the discussions today with council, obtaining evidence of the acceptance of the financial statements, which just took place. And then after this meeting, we'll be sending our management representation letter to Trevor and Terry for their signature, and that's included as an appendix to this document. And then also confirming if there's any subsequent events that may require disclosure in the financial statements. So earlier today, I already reached out to Terry, and he confirmed that there is no subsequent events that would require disclosure in the financial statements. But again, raising that to council if council is aware of any items that may require disclosure. Any future? None? Okay, perfect. So now we can move on and go through some of the findings for the audit findings report. So if we turn to page 7, and so page 7 talks about management override of controls. So management override of controls is something that's present in all of our engagements, and we essentially set and established procedures as part of our audit methodology to respond to that risk of that potential fraud risk that is not rebuttable. So it's present in all audit engagements, and we have certain procedures that we're performing as a result to respond to that. So some of these procedures that we've listed as an example include testing the journal entries and other adjustments. We also perform a retrospective review on significant estimates. And we also evaluate the business rationale for any significant unusual transactions, if there are any. And so as a result of our procedures, we have no significant findings related to management override of controls. If we turn to the next page. So the next page summarizes some of the procedures that we've performed in regards to tangible capital assets. So tangible capital assets, as Terry mentioned, show the historical cost of the city's assets that are on the books, net of accumulated amortization. And so as a result of our the procedures that we performed, we had one finding where the amortization for the year, or some additions, took a full year of amortization, but those assets were not all added on January 1st. They were added throughout the year. And so we did a calculation to estimate the amortization, like the difference in amortization between taking a full year and when the assets were put into use. We came up with a small difference of $28,000. And in discussions with Terry, when we raised that to him, he agreed with that that analysis, and he recorded that as a corrected audit difference in the statement. So the statements that you just looked at with Terry reflect that adjustment being recorded. And as a result of our other procedures that we performed in regards to tangible capital assets, no other issues were noted as part of our testing. And as we go through, if we turn to the next page, and these are just like a sample of some of the procedures that we've performed. We do other procedures, but we're just giving you a few of the highlights on some of the larger balances within the financial statements. And so the next area, we did some work over reserve transactions. And so we did some testing in regards to contributions and distributions out of reserves. And as a result of those procedures, we have no findings and no issues to report to you. Next page, please. We also did testing in regards to expenses, including payroll expenses. We performed a number of procedures over those captions, and we have, again, no findings to report as a result of those testing. So next page, please. And so this slide speaks to revenue. And so essentially during the year, there were some new accounting standards that were adopted by the city during the year because they came into effect for the city's fiscal year, fiscal 2024 year. And so as a result of those new standards, Terry has done some analysis and considered the impact to the city as a result of those new standards. And we then performed audit procedures over that work that he did, including there are some additional note disclosures in the financial statements as a result of adopting those standards. So largely the impact was related to the way the city would account for building permits and development permits. And so as a result of adopting the new standard, there's a portion of those building and development permits that are being deferred. And that's in accordance with that there's more performance obligations essentially for those building and development permits. So essentially someone has obtained a building permit, but there's various inspections that still need to take place. So there's still work that the city will need to do over the money that they've collected related to the building permits. So some of that revenue is being deferred until those inspections are being completed. And so as a result of adopting the new standard, as disclosed in note 25 of the city's statements that Terry prepared, there was $19,000 related to deferred revenue related to development permits. We go to the next page. So this page speaks about controlled efficiencies. So the first three sections are essentially some required communications in regards to controlled efficiencies. But the last box at the bottom summarizes our findings, which essentially, as a result of the audit, there are no significant controlled deficiencies that were noted during the course of our audit. So nothing to raise to your attention. We turn to the next page. We have summarized other observations. So on this one, we've highlighted one observation with respect to journal entry review. And so for a period of time, the position of CAO was vacant, and Terry was posting entries as part of his role, but there was no one in a more senior position in management to review his entries. We've performed our work over those entries. We have no concerns with them, but we have a recommendation that management and council should consider maybe an authority matrix to establish that if roles are vacant at the senior level, that there may be a level of review that takes place. Maybe a member of council might do a secondary review on the entries where Terry needs to post them. So again, just recommendation for best practices, but we don't have any concerns as a result of our test work on journal entries. Turning to the next page, we have a fairly long summary of a variety of other matters that we just wanted to summarize to bring to your attention. And so we've already discussed some of these in terms of like compliance with laws and regulations or instances of fraud. But in regards to the other ones, such as lawsuits, we're aware that there's one ongoing matter that council is making a claim and are working with their lawyers on at the present time. And then, as we already discussed, no other subsequent events were identified. And all the other items are just to summarize various items that we covered during the course of the audit, and there's no matters to report as a result of those procedures. The last item on the summary refers to Appendix 2, which is our management representation letter. And so in our status, we mentioned that this is one of the pieces that is outstanding that we'll finalize after the conclusion of this meeting. And essentially the management representation letter are various representations from management that they provide to us as part of the engagement, and it's a standard letter that is consistent in all audit engagements. And at the back of the management letter, in the appendice to it, there's a summary of corrected misstatements, and that summarizes the corrected misstatement with respect to amortization. And there's also another corrected difference as well, and that's with respect to interest. So there's some interest on investments that was not accrued. So as part of our calculations, we identified that there was, I think it was about $30,000 that was not accrued. And when we again raised that to Terry's attention, he decided to make that adjustment as well. So there's no uncorrected misstatements. There's 2 corrected misstatements that were identified during the course of the audit. If we go to the next page. Perfect. So this, again, is a lot of words on one page summarizing some items related to accounting policies and practices. The first box essentially being the main one where, again, we're referring to the new revenue standard that was applicable to the city and was adopted during the year. There are also 2 other standards that were adopted by the city. So one related to purchase intangibles and another related to public-private partnerships. Both of these other standards didn't have an impact on the city's financial statements, but there is a note disclosure related to the city's adoption of them. So no findings as a result of our procedures on revenues and the other standards, and the note disclosures for the financial statements are appropriate. And the other 2 boxes speak to the estimates as well as essentially judgments. So there's various judgmental areas within the statements where estimates are present, and again, we have no findings and no issues noted as a result of our audit procedures. We go to the next page. Here we're essentially at the appendices, and so within this report, there's a number of appendices that we've included. So the first one is the management representation letter. So that is essentially a summary of the representations that management will be making to us as part of concluding this audit, and it includes the corrected misstatements schedule that is within there. The other two appendices for Appendix 3 and 4 include additional information to council related to the new standards. So there's a page summarizing the new standards, and it's speaking to it in a bit more detail for information purposes, as well as a couple of other standards that are going to be applicable to the city in the future that will be applicable in a future accounting year. So again, just for information purposes. And then the last appendix, Appendix 4, includes various links and articles that, again, may be relevant to council and the city at this time or in the future. So again, just reference material that is helpful to consider as part of your roles as those charged with governance. And yeah, that essentially summarizes what we wanted to present to council and talk about. And maybe I'll open up for if there's any questions at this time.
Thank you. Any questions? Please do.
Just thank you for everyone's work in this, and especially given the extra work that Terry had on his plate at the time. I imagine it would be a lot to deal with. I did appreciate the links at the end. I did go through a couple of them and noticed that cybersecurity is rising to the top as a risk there as well, and just lots of helpful information in there. So I just appreciate that. Thank you.
Yeah.
Thank you very much for the presentation, and yeah, thanks, Terry. We appreciate all the work you've done for us this year. Thanks very much.
Okay, thank you so much.
Next, moving on to Section 4, 4.1, City of Armstrong Annual Tax Rate Bylaw Number 1936, 2025, that the City of Armstrong Annual Tax Rate Bylaw 1936, 2025 be read a first, second, and third time by title only. Do we have a mover? Thank you, Councilor Wayner. Seconded by Councilor Todd. Any questions? Seeing none, I'll call the vote. All those in favor? Carried unanimously. And with that, we'll be looking for a motion to adjourn. I know, I thought that was pretty good. We just got to stamp the time. So we'll have Councilor Wayner and Councilor Todd. All those in favor? Thank you very much. The meeting is adjourned at 5:34.